Hey, this is Brian Kurtz with PremierRealEstateInvesting.com. Thanks for stopping by again to check out our next episode in our Funding Fundamentals video series. Today we're going to be focusing on private money. Now, private money is pretty much the brass ring of all real estate investing funding sources. And the reason why is because it is so flexible, and as long as you can find enough people with enough money, it is pretty much limitless. So let me give you an example of what private money is. Private money is pretty much the oldest form of real estate investing lending, which means you ask your friend for the money and he gives it to you. No qualifications, no credit checks, no appraisals being run, no nothing. You ask somebody who you have a relationship with and they give you money, and you just have to make sure that they are secured. So private money is great. It's been around for as long as people have been borrowing money, and I don't know when they started using it in real estate, but you definitely are going to want to take advantage of it because of, like I said, the power and the flexibility. So let me give you a real quick example deal. So let's just say you were going to buy a house from us, and you were going to pay $40,000 for it, and you needed about $15,000 for repairs, and you were going to do the repairs yourself. You weren't going to do any of our done for you deals where we actually do the repairs for you. So you need 40 for the purchase, 15 for the fix up, so you need $55,000 plus a few for closing costs, but we'll just leave closing costs out of it for this one in order to keep the numbers simple. Let's just assume you had some money and you were going to use it to cover your own closing costs. So this is how it works. You call Uncle Joe. Uncle Joe's kind of rich and he has lots of money. You don't even know how much, but he's like Daddy Workbucks rich, and he likes you. He always liked you, and you would go fishing during the summer, and you call up Uncle Joe and you say, Uncle Joe, hey, here's what I'm doing. I want to buy these houses and I want to fix them up. I want to rent them out, and I want to make big money while the getting's good, while prices are low. And you know what? Uncle Joe made a lot of money in real estate himself. He likes this idea, and he likes you. He likes you, okay? And because you have a relationship, and this is kind of called relationship funding, he says, yeah, I'll go ahead and do that. You find a great deal, call me up, talk about it, and I'll get you the money. The only thing that I require is if I'm going to loan it to you, you're going to give me a first mortgage on the house. So if you don't pay, I'm going to foreclose, I'm going to get the house, and I'm going to either rent it out myself or I'm going to sell it and get my money back. Sound fair? And you say, Uncle Joe, that is killer fair. I am so excited to do that. I will go find a deal today. So you go out and you actually already know of a deal because it came in your inbox because you were on the wholesale hot list, because you stopped by the wholesalehotlist.com and you put your name on the list, and so you already know about a great deal. And so you just go back, confirm, call us and say, hey, is it still available? We say, yeah, it is. Probably won't could be available by tonight though. You call Uncle Joe back and say, Uncle Joe, here's the situation. This deal is blah, 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 and it's at blah, 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 Main Street and blah, blah, blah. It's going to be worth $100,000 as soon as it's fixed up, and so I need to borrow $55,000. 40 for the purchase plus 15 for the rehab. Are you ready to go? And he says, of course, I told you that I was ready to go. Let's do this. I love you, man. You're like my brother's son. Actually, you are my brother's son. So let's go do this, okay? I'll make sure the money's there, and you just take care of the purchase agreement. You contact those guys and put it on paper, put the deal on paper, and get it to the title company. And like I said, make sure that title company gets me my mortgage so that I can go ahead and give you the money. So you take care of all that, right? We get the purchase agreement drafted up, and we get it to the title company. The title company does their thing, and you call up Uncle Joe on the right day and say, hey, we need to have that money and certified check made out to the title company, not made out to you. And you go stop by Uncle Joe's house, you pick up the check, you bring it to closing. Now at closing, what's going to happen is, because Uncle Joe decided to lend you that $55,000, the funds, the $55,000 is going to turn into a loan backed by a mortgage, and $40,000 is going to go to pay the actual purchase price of the house, and you would get a check back for $15,000. So you can actually get money back and then use it to go rehab the house, right? And Uncle Joe gets a mortgage. You take care of what you do, you go ahead and rehab the house, and then you start renting it out. Now, once you're renting it out, guess what? Money is coming in each and every month, but think about this. you're only into the house, remember, for $55,000. And that means your payment might be, including taxes and insurance, I mean, just a round number, it might be around $550 or $570. But your loan, or your rent coming in from your tenant who's in your house is $940 to $960, right around $950 a month, right around there. You know, so you're making $300 to $400 per month each and every month in cash flow. You're paying Uncle Joe. He loves you. He wants to lend you more money because you are beating up the stock market by giving him a great return on a well-secured property. I mean, after all, if you died, God forbid, and he had to take the house back, he could rent it out and be making the money every single month, or he could sell it and make $30,000 in profit. So private lending that's the general idea. It's an awesome way to approach real estate investing, and using it as your main and primary funding source, because all you have to do is pick up a phone and make a phone call, and money shows up once you've developed the relationships. Okay, so that is the huge main pros to this method. Easy to get the money once you make the relationship. Okay, phone call lending is what I like to call it, phone call lending. Interest rates tend to be less, usually way less than hard money. Usually people that are loaning to you on private money are not looking for points. They're not looking for any points at all. They just want a higher return than what they're getting in the stock market. They want their money to make more than 4, 5, 6%. They're happy to get 10 to 12%, and you're happy to pay it because you're buying the houses so cheap that you could pay 20% and you would still be making killer money each and every single month that your property is being rented out. So that is the basis of hard money, and that's the pros of it. The cons to hard money: you do have to actually go out and build relationships. You have to call people. You have to talk to people about what you do, and you have to not be afraid to say, this is what I do. I borrow private money to buy houses, fix them up, and rent them out for profit, and I give great returns. Are you interested in this type of thing? So you have to take that step in order to go ahead and find the private money. Or you can do more advanced things like what we do, in that we mail out to doctors and dentists, people that have money. We have seminars, we have websites and things like that, always trying to attract private money to come in and build relationships so that we can buy houses ourselves and rent them out for long-term growth. If you think we only sell properties to you guys, you're wrong. We hold onto some of them to ourselves, and we rent them out. So that pretty much wraps it up for private money. Put this one in your head and put a star or a checkbox next to it or something, that this is a very, very important piece of the puzzle. If you can get as much private money lined up as possible, you don't have any problems investing in real estate ever again. So consider that, and like I said, next episode we're going to be talking about small local bank financing, which is almost as good as private money. Not quite, but almost. So we'll see you next time. Thank you again for checking out the Real Estate Investing Show.